So if you go out and buy a really high-end office chair today, you might think you're paying for, the steel, the mesh, the labor,
Right.
but you're actually paying a premium for this massive invisible data gap.
Oh, yeah. A huge gap.
Right, because factory floors are just chaotic. I mean, they're inherently messy. And traditional accounting is, well, it's slow.
Very slow.
Yeah, and that time lag between a physical action happening on the floor and the financial realization of it on a ledger, I mean, that just destroys profit margins.
It absolutely bleeds them dry.
Right. So today, for our deep dive, we're looking at a software blueprint that attempts to close that gap completely. It's about turning all that factory floor chaos into real-time financial data.
Yeah, and the source for this dive is actually a really comprehensive technical capability document.
Mm-hmm.
It's for a system called APS, or Almadaware software for accounting and inventory.
So we're basically going to deconstruct how the centralized digital brain models physical reality. We want to understand the mechanics of how a business maintains absolute traceability, from like a single raw screw all the way to a dynamically updated price tag.
Which is incredibly hard, especially when navigating volatile supply chains today.
Totally. Now, before a factory spins up a single machine, the physical reality has to be mapped digitally, right?
Right.
And in manufacturing, that map is the bill of materials, or the BOM.
Yeah, the BOM. And what the documentation reveals is that this APS system utilizes what they call a multi-level bill of materials.
Okay, multi-level.
Right, which is a significant upgrade from just a flat list of components.
Like a flat list being just, I don't know, a grocery list.
Exactly. A flat BOM is just a grocery list. You need eggs, milk, bread. But a multi-level BOM is, it's a hierarchical database structure.
Okay.
It maps the precise dependencies of complex manufacturing.
Right. So to visualize this, let's use an analogy like moving away from simple objects. Think of a massive Thanksgiving dinner.
Oh, I like that.
Yeah, so you aren't just, making a pie. The pie is the finished product,
Right.
but you have a sub-recipe for the crust, which is, I guess, a semi-finished product.
Exactly.
And that crust requires flour and butter, which are your raw materials.
Right. And in the manufacturing world, think about something like an electric vehicle.
Oh, yeah, that's a good one.
The car itself is the finished product. But you don't just bolt raw lithium and plastic together to make a car.
No, obviously not.
You have the battery pack, which is the semi-finished product.
Right.
And that battery pack requires its own subassembly of lithium cells and steel casings. Those are the raw materials.
So the APS system classifies all these things.
Yeah, it classifies products into distinct categories. So you have raw materials, semi-finished, finished, commercial goods, and production services.
Okay, to manage all those nested dependencies.
Exactly. The software tracks that entire relational hierarchy. It knows that a command to output one finished EV must automatically trigger the production of one semi-finished battery pack, which then simultaneously triggers the allocation of specific quantities of raw lithium and steel from inventory.
It's all connected.
It is. And the sort also notes it allows for BOM versions and optional components.
Wait, optional components meaning what?
Meaning the production floor can pivot between slightly different configurations without needing to, rewrite the core manufacturing database from scratch.
Oh, that's smart. And I guess that flexibility leads directly into one of the most strategic features outlined in the source, which is the, what did they call it? The pre-execution production cost preview?
Yes, that is a huge feature.
Yeah, because if you have this multi-level BOM mapped out, the software can just query the current inventory costs of every single component and subcomponent, right?
Correct.
So if a production manager inputs a plan to build, say, 500 units, the system just simulates the exact material requirement.
It simulates the requirements and calculates the total financial outlay before any physical work even begins.
Before you even turn on a machine.
Yeah. Exactly. This represents a fundamental shift in operational strategy.
How so?
Well, it moves the factory from being reactive to proactive financial defense.
Proactive financial defense. I like that.
Yeah. By running that pre-execution preview, management can see if, say, a recent spike in the market price of raw lithium has pushed the cost of the semi-finished battery pack so high that the finished vehicle will actually sell at a loss.
Oh, wow. So you catch it early.
You catch the margin degradation in the simulation rather than, discovering it on an income statement 30 days later.
Right, when it's way too late.
Exactly.
But okay, a perfect digital simulation is great, but it only exists until physics gets involved.
Oh, absolutely. The floor is messy.
Right, because the blueprint can calculate a perfect yield, but a factory floor is a physical environment. Machines fall out of calibration, cutting tools get dull, materials arrive with hidden defects.
Yeah, things break.
So how does the software handle that?
Well, the APS system is actually built to ingest that physical friction. The documentation indicates that it tracks an expected waste percentage per component directly within the DOMA.
Oh, so it just structurally assumes that a certain percentage of raw material will not survive the production process?
Exactly. I mean, mathematically, if an automated lathe is turning steel cylinders, you are producing scrap metal.
Right, the shavings?
Yeah. So the baseline cost calculation incorporates that guaranteed loss right from the start.
Okay, that makes sense. But beyond just expecting waste, the source says the software actively records scrap during production, contrasting the expected quantity versus actual quantity.
Right, to see if the real world matches the model.
Right. And it isolates cutting and processing losses as specific metrics. And here's where I wanted to push back a little bit.
Okay, yeah.
There's a detail in the feature list that just seems really counterintuitive for an automated system.
What's that?
It notes that the software requires the operator to manually log the reasons for waste, and it features manual material selection on the fly. I mean, if we are relying on a highly sophisticated digital brain, forcing a worker on the floor to interact with a drop-down menu to explain a ruined part, it just feels like an archaic bottleneck. Shouldn't the sensors just know?
I get why you'd think that. It might seem like a bottleneck, but it is actually the mechanism that generates actionable intelligence.
Actionable intelligence? How?
Because, think about it, sensors and automated counters can tell you that a steel casing failed a tolerance check.
Right. It's too big or too small.
Exactly. The automated system recognizes the what. It knows the casing is unusable and inventory has been depleted,
Okay.
but the automated system cannot determine the why.
Oh, I see. Because the sensor doesn't know if the steel was the wrong gauge from the supplier or if the hydraulic press operator simply misaligned the sheet.
Precisely. And those two scenarios require entirely different management interventions.
Right.
If it's a supplier defect, procurement needs to get on the phone and negotiate a credit.
Sure.
But if it's operator error, the floor manager needs to schedule retraining.
That is a huge difference.
It is. So by forcing the human operator to manually log the reason for the scrap, the software bridges that context gap.
It forces human accountability.
Yes. It captures human accountability and feeds that qualitative data back into the system to refine the expected waste percentages for future runs.
Wow. Okay, that actually makes total sense now. But capturing the physical reality of the floor, the steel we cut, the steel we ruined, the reasons it failed, that just treating the symptom, right?
Well, yes and no.
Because the real disease in manufacturing is financial bleed.
Absolutely.
We need to look at how the APS system translates a shattered piece of material into actual dollars and cents on the master ledger.
Right, the financial nervous system.
Yeah.
And the transition from physical tracking to financial accounting relies heavily on how the system values the inventory in the first place.
Right.
The source document highlights that APS calculates a weighted average inventory cost.
Weighted average.
Yeah, which is critical for businesses operating in environments where commodity prices fluctuate wildly.
Okay, let's explore the mechanics of that because it's important.
Sure.
Say a manufacturer buys 1,000 units of steel in Q1 at $10 a unit.
Okay, $10.
And then global supply chains tighten up, forcing them to buy another 1,000 units in Q2, but this time it's at $20 a unit.
Right, prices double.
Yeah. Now, the physical steel looks identical on the warehouse rack. You can't tell the difference.
No, steel is steel.
So when an operator pulls a unit for production in Q3, the system doesn't try to track whether it was the $10 steel or the $20 steel, right?
No, it doesn't. Instead, the weighted average algorithm continuously blends those purchase costs based on the total volume in stock.
So it smooths it out.
Exactly. It smooths out the financial volatility, providing a highly accurate, dynamic baseline of material costs.
And the source explicitly states that APS executes instant material cost updates based on changing purchase prices.
Instant, yes.
Which means the moment that expensive Q2 steel is received at the loading dock and entered into the system, the weighted average recalculates globally.
Yep, across the whole system.
So any product actively on the assembly line utilizing that steel instantly sees its baseline production cost shift upward.
Instantly.
Yeah.
But, raw materials are only a fraction of the cost equation.
True, you have to pay people.
Right. And the APS documentation notes it tracks costs far beyond physical goods. It actively records labor, services, and machine operating costs.
Okay.
The real differentiator here is how it handles the dynamic allocation of indirect costs.
Indirect costs, like overhead.
Yeah, through designated cost centers mapped to specific factories, departments, or even specific production lines.
So tracking direct costs is straightforward, right? You have the steel, the hourly wage of the assembly worker.
Very easy to track.
But the complexity lies in allocating indirect costs, like the depreciation of the hydraulic press or the electricity powering the climate control in a specific manufacturing wing.
Exactly. That's usually where traditional accounting struggles. But this system takes those overarching indirect expenses and algorithmically allocates them down to the individual product batch based on metrics like machine runtime.
Wait, down to the batch level.
Yes. So if a batch of products takes twice as long on the hydraulic press due to, say, a complex cut, that specific batch absorbs a higher percentage of the machine's depreciation cost.
Oh, that is brilliant.
It is.
Because it prevents the manufacturing of simpler, faster products from artificially subsidizing the cost of complex, slower products on the balance sheet.
Exactly. It gives you the true cost of that specific batch.
And this data isn't just sitting in a siloed production database either.
No, not at all.
The feature list emphasizes automatic accounting entries linked directly to production. It integrates inventory, cost of goods sold, and production accounts seamlessly.
Right. The mechanism here is essentially eliminating the human accountant from the real-time data flow.
Like a tiny invisible accountant sitting on every single machine.
Basically, yeah. A barcode scan on a scrapped casing on the floor doesn't just record a ruined part.
Right.
It triggers an API call that instantly debits the raw material asset account and credits the waste expense account.
Instantly.
Instantly. This real-time database synchronization eliminates the traditional month-end reconciliation process.
Oh man, I can just hear accountants cheering everywhere.
Oh, I'm sure. Because in legacy systems, physical production and financial reporting operate asynchronously.
Right. The floor tracks physical movement, the accounting department tracks invoices, and then they spend weeks attempting to reconcile all the discrepancies.
Exactly. And by the time leadership realizes a specific product line operated at a loss, they are already halfway into the next quarter.
It's too late to fix it.
Right. The APS system enforces absolute alignment, creating a single, indisputable source of truth for the organization's financial posture at any given millisecond.
So we have a fully costed product sitting in a warehouse depot, and the master ledger reflects its exact value, accounting for every scrap of waste and minute of machine depreciation.
It's a beautiful thing.
But locking in the production cost is only half the battle, isn't it?
Oh, absolutely.
The final major capability outlined in the source document revolves around pricing, reporting, and global reach. Because, honestly, producing a perfectly costed item doesn't protect the business if the sales team prices it incorrectly when they go to market.
That happens all the time.
Yeah.
The documentation reveals a deep focus on protecting the final profit margin through automation.
How does it do that?
Well, it features the auto-calculation of selling prices based on target profit margin.
Target margins, okay.
Right, which is directly tied back to the real-time weighted average inventory costs we just analyzed.
So the mechanics of this are fascinating. The source explicitly mentions automatic price updates when raw material costs change.
Yep.
So if the weighted average cost of our steel shifts upward on Tuesday because of a new supplier shipment, the system calculates the impact on the finished product immediately. And because the software is anchored to a predetermined target profit margin, it autonomously recalculates and lists the selling price of the finished goods on Wednesday to absorb that material cost increase.
It functions as an autonomous financial shield.
That is wild.
It is. But it goes a step further with what the document identifies as a safe minimum pricing setting.
Safe minimum pricing.
Okay.
Yep.
This acts as a hard-coded governance rule to prevent internal revenue leaks, specifically addressing the behavior of sales departments.
Ah, yes, the sales team. Because sales teams are traditionally incentivized by volume and top-line revenue, which often leads to, aggressive discounting just to close deals.
Oh, exactly. I just need to make the sale.
Right. However, if a sales representative doesn't have visibility into the dynamically allocated indirect costs, like if they don't realize the machine depreciation on this specific match was higher than usual, they might offer a discount that inadvertently pushes the sale below the actual cost of production.
Which means the company pays to sell the product.
Exactly.
But the safe minimum pricing feature mitigates that operational risk entirely.
How so?
It establishes an absolute floor based on the real-time aggregated cost data. A sales representative can negotiate and apply discounts up to a point, but the system will physically block the execution of any transaction that breaches that minimum profitability threshold.
Wow. So it just removes human emotion and guesswork from the final transactional pricing.
You literally won't let them sell it for a loss.
That's incredible. And supporting all of this is a massive reporting infrastructure, right?
Oh, yeah. The source lists capabilities for granular material consumption analysis, production inventory movement tracking, profit margin variance, detailed waste reports.
It's a lot of data.
It is. And this relies heavily on barcode integration for item identification, allowing the system to track batches and source transactions for comprehensive traceability.
That level of traceability has to be a massive compliance and quality assurance advantage.
Oh, it's huge. Say a client reports a critical failure in a finished component. The manufacturer can scan the barcode and execute a full forensic audit.
Just from the barcode.
Just from the barcode. They can trace that exact item back to the specific batch of raw materials, identify the original supplier, see which machines processed it, and even review the exact expected waste percentages recorded on that specific shift.
Everything is recorded.
Everything.
Now, the document also highlights that APS supports multi-currency operations with varying exchange rates.
Right.
Which is essential for modern distributed manufacturing. I mean, a business might procure raw materials in euros, pay factory overhead in a local currency, and sell the finished goods globally in US dollars.
Exactly. And the software must continuously reconcile those fluctuating foreign exchange rates against the target profit margin in real time.
That's a lot of math happening constantly.
It is. And to manage this complex data ingestion across diverse regional workforces, the software utilizes a dual Arabic and English user interface.
Okay, that makes sense for global reach.
But a particularly crucial detail for data integrity, which I found fascinating, is the inclusion of Arabic speech-to-text support.
Yeah, I saw that. And that speech-to-text feature solves a massive user experience problem in industrial environments.
It really does.
Because factory floors are loud, operators wear heavy protective gear, their hands are covered in grease or debris.
Yeah, it's not a clean office.
No. So asking an operator to interrupt their workflow, walk over to a terminal, take off their gloves, and type out a detailed explanation for why a machine jammed, it just creates severe physical friction.
And user friction inevitably leads to deferred or fabricated data entry.
Absolutely.
If the system is difficult to interact with, workers will resort to shadow systems. They'll write things on clipboards to enter later, or simply, guess at the end of their shift.
Which ruins the real-time data.
Exactly. The speech-to-text functionality allows an operator to instantly log a scrap reason verbally.
Just by talking.
Yeah. It removes the physical barrier to entry and ensures the centralized digital brain receives accurate, immediate data.
That is just such a practical solution.
It really is.
So really, every component of the Al-Madawir APS system, from the multi-level B-BOM mapping the initial strategy, to the dynamic allocation of indirect machine costs, to the speech-to-text functionality lowering the barrier for data entry. It all serves one core objective, doesn't it?
Which is?
Collapsing the time delay between physical action and financial reporting. It aims to eliminate that data gap entirely.
That's a great way to summarize it. It demonstrates that modern manufacturing is less about the physical manipulation of materials and more about the rigorous real-time management of information.
Yeah.
However, reviewing the extent of this automation, specifically the software's ability to autonomously recalculate selling prices based on global supply chain metrics and lock in safe minimum margins, it raises a significant question about the future of business operation.
Oh, I like where this is going. What's the question?
Well, think about it. If a digital architecture takes over the mathematical burden of guaranteeing profitability, the role of the traditional pricing strategist is fundamentally altered.
Oh, wow. Yeah, I hadn't thought about that.
Right. When software inherently guarantees that a company cannot lose money on a transaction, establishing a price point is no longer an exercise in cost accounting.
Because the software is doing all the accounting.
Exactly. So what's left? It becomes purely an exercise in human psychology.
Leaving the strategist with only one variable to calculate.
Exactly.
Yeah.
Determining exactly how much the customer's desire is willing to sustain.